Ladies and gentlemen, good morning or good afternoon, depending on where you're based. Of course, as always, today with us we have Santosh Sharan. He's the co-founder and CEO of Zeer AI. Santosh has been in the data space for decades, if not eons, one might argue. He's been the advisor of Digital Zone, executive member of Pavilion, COO of Retention, COO of RB2B, co-CEO of Contact Out, advisor to Retention, advisor to Gong, COO and president of Apollo, advisor to Lusha, advisor to Lead IQ, COO at LeadGenius, interim CEO at Everstring, CPO at Aberdeen, advisor at HG Insights, advisor at Demand Metrics, VP at ZoomInfo, advisor at OneForce, VP at Nuance Communications, founder and CEO of Kazens. So overall, he's been in the space from 1999 till today. So the main idea today is that we're going to be speaking with one of those people that are frequently referred to as gods of their industry. He has been in the data space for quite some time. We're going to start by discussing SaaS solutions as a whole. So all his journey from the beginning to the end, what a startup DNA, operational excellence within that startup DNA, what it's like advising 15 plus SaaS startups, and of course his opinion on the market, future trends, potentially a playbook. We'll see how lucky we can get and how much time allows us to do it. He should be joining shortly. Hope you guys enjoy this. Santosh, thanks for joining. I've given a little bit of brief introduction into your background, just to give you some insight into what I'm doing. I started this little hobby of mine where I like to invite industry leaders on board so that they can discuss a little bit about what they're doing, what their industry is like, and so that being said, kind of introduce you to the floor, but feel free to take a couple of minutes and introduce a little bit about yourself and what you are doing at Zeer AI at the moment.
Sure, and lovely to run to you again, Alex. Um, so I have worked in go-to-market companies for about 15 years, starting with ZoomInfo in 2012. That was a whole different era where automation and data really helped sales and outreach, right? But fast forward to today, and what I see is that go-to-market is completely broken, right? The same automation, the same data that helped is actually disrupting sales and in some ways hurting, right? So emails are never, none of the emails are getting delivered. Nobody responds to unrecognized phone numbers anymore. Even LinkedIn outreach is broken, right? So I was scratching my head last quarter. What is next? Because clearly doing iterative innovation, making this just 5%, 10% better, is not going to help. And don't get me wrong, there are companies that do get value from top of the funnel and outreach, right? Um, but we need something different. And this is where I decided in January to start Zeer AI. So with Zier, we are kind of flipping the funnel. And
Okay.
if you, if you think about regular go-to-market, it starts with sales reps identifying their market and sending 10,000 emails, out of which only five buyers are in market to buy, right? The other 99% of that outreach goes to waste, right? So it turns out 50% of go-to-market cycles on top of the funnels are simply going to waste, right? So what we are building is where buyers are raising their hand. They will come to Zeer AI, do some research, problem research. So they could say, hey, I'm having churn. How do I solve churn, right? And using AI and human and experts will try to solve their problem in a self-serve manner. Um, and then as we are solving, we also recommend vendors to them. And then we are using AI agent to reach out to vendors. And vendors can pitch to the agent rather than the buyer. And the agent makes the decision on who to. It basically creates a meeting in the seller and the buyer's calendar. Now, one other point, we spoke to a lot of sellers and they said, look, if I have to pitch to an agent, then why can't I have an agent too? So we have built an agent to agent communication where
Right.
top of
Okay.
the funnels, buyers and seller agent talk to each other, discover each other whenever there's a demand and intent, and then schedule meetings in the calendar. Now, the good thing about these meetings are once it's set, they are super high value, right? Because a buyer, let's say they have to buy a product, a buyer agent will do a more comprehensive job than a human. It will go try to have conversation with 20 companies or 30 companies and ask the same qualifying questions, right? And then each of those companies, seller agents are also asking qualifying questions from the buyer, right? And when there's a match, it's a really high value match. So buyer, after talking to 20 vendors, will only bring humans into the call for three of them, which means there's already likelihood of 30% of that deal closing, right? So you start with a significant likelihood of closing. So we think by doing this, we reduce wastage in go to market. Sellers don't have to send like 10,000 emails to only find five buyers in market. In fact, there's no emails being sent here, right? It's just agent to agent communication is setting meetings. So that's Zeer AI in a nutshell.
Okay, that's pretty cool. If there's no, the first question that pops into my mind is, well, there's many, but one of them is, there's no emails. How is the initial outreach being done? And I don't want you to get too much into the logistics of what you're doing, but as much as you can share with us.
So we are flipping the funnel on the outreach. Instead of sellers sending an email to the buyers,
Mm-hmm.
we are starting the process with buyers coming to us to solve their
Right.
problems, right? And then once they say, yeah, this is I need this problem to be solved, so I need softwares to address my churn. So we show them software and we say, do you want us to run an evaluation? There are like 20 other vendors. And the buyer says yes. So buyers are sending outreach to those 20 sellers saying, hey, I have somebody interested. Do you want to pitch? Right? And sellers will pitch to the buyer. So sellers are not sending those emails anymore.
I see. I see. Okay. I heard you say in a previous, I think, discussion that you feel responsible for the market becoming what it is today. So it seems to me like you're creating a brand new market, an aggregator of a sort that sort of delegates most of the problems that were created in this industry. And my question to you is, do you think that is where the market is going? Is it going to be fully automated in the next few years? Are you just pioneering it? Are you the big brains behind the new market? How do you see it going?
Yeah, yeah. So certainly this is going to be a brand new way to do go to market. So I'm under no illusion that the entire, go to market will shift towards what I'm building. If it does, it'll take like a decade. I mean, things move slowly. I would be happy even if 1% of transactions in 2024 happen in 2026 happen through this new model, right? Or there were $600 billion worth of SaaS sold in 2024, right? So that's a big market. Um, I foresee that there will be traditional outbound,
Okay.
but the sellers are going to just hook up their revenue engine or CRM with our buyer-led or Zeer AI, and they'll just get highly engaged, high intent leads coming into the calendar, and they'll pay for it, right? So this will just be a new channel of getting leads, but then they'll continue to do what they're doing today.
Okay. Do you think in the future there might be any bottlenecks that might come up? Do you foresee any potential bottlenecks that might come up? I don't know, AI agents not being as efficient or not being as clear or not understanding potentially a problem as well as a human agent might. or anything of that sort, something
Uh,
I might not be seeing.
Totally, totally. No, it's astute of you to bring this up. Um, I see a lot of AI agents for sales being built that will take over the call and replace a sales rep.
Mm-hmm.
We don't subscribe to that worldview. So we are
Mm.
using AI agent only to qualify and make the deal. So we are doing matching. We do not replace the sales rep, right? We are just making the sales calls more effective. We think that the sales reps are overwhelmed. They're taking too much calls because a lot of those calls are wastage with buyers that will never close, right? So we just want to increase the quality of those conversations. So we find that AI agent can play a good role very top of the funnel when you're not talking about the real discussions or negotiations or really mapping out values. If you are doing a call and asking very rudimentary or preliminary kind of qualifying questions, like what size is the company and what is your pain,
Mm.
and just using that to map, are they a good fit for what we are delivering, right? We think if you have agents on both sides, then they can talk to each other in real time and give you that answers to those questions. Why even wait a week or 2 weeks to get on a call to get those answers? That speed is a real value, and we think
It
agents
is.
can do that. But in the end, humans have to run those calls and close it.
How is the market responding to Zero AI so far?
So we have built a very thin slice of this. We built a agent for sellers. We haven't built a whole solution yet. We haven't
Mm-hmm.
built well internally. Uh, we have seen buyer to seller, agent to agent conversation. So it is funny sometimes because in the beginning, the first few calls that we did, both seller and buyer agents wanted to ask their own questions, and they were getting confused. Uh, and then we said, no, 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 let's like have an agenda in this meeting. So now they are announcing an agenda, saying, "Hey, I'll go first, and then you come next," right? So, uh, and then they were not asking follow up. They're so eager to ask their next questions, like like a kid. So now we have programmed where they listen carefully, they ask follow up, understand what one party is saying, and then move to their side of the question. So it's very interesting as we are building. We are learning, or I am personally learning more about how a good sales call or qualifying call or discovery call should be run. But yeah, we are actively building this agent to agent communication. We are pioneering this space. We haven't released it, so um, probably another couple of months, perhaps, when we'll be ready to release the whole platform. But what we have released is because we have a seller agent, uh,
Mm-hmm.
we are doing alpha with, you can put it on a website and then it'll just qualify web visitors and say, so web visitors can talk to a seller agent and it can qualify them and book meeting. But that's just one side of with humans. Um, we are building that agent to agent communication. It's not released yet.
It's amazing. Okay, let me put a pause into that conversation. Let me shift you into something else because Santosh, you're like a lecturer. You know, I remember some of the meetings that I've attended with you talking, and it was always mesmerizing to hear you talk about any topic, really. So let me jump into B2B SaaS, right? So you've scaled a number of companies. What are some non-obvious playbooks you like to work with? So what's your go-to strategy?
So when you scale companies, I was actually, it's interesting you asked this question. I was going to write a post next few weeks because at Zeer AI, I think long and hard how to make this a billion-dollar company, right? So there's this terminology that Vinod Khosla uses. He calls it $0 million company versus $0 billion companies, right? So when
Hmm.
you're very early in your journey and your revenue is zero, the companies that are destined to become billion dollar exhibit very different characteristics than the company that's only destined to become like say tens of millions of dollar, right? Uh, and the difference is, um, most good companies try to meet their goals,
Mm.
right? So if you have a board, they insist that you have to meet either revenue goal, usage goal, adoption goals, or so on, right? But what they forget, companies that excel or do like breakthrough growth, they meet their goal, but build systems and automations, right? Versus the other company also meets their goal. So in the beginning, they might look like both companies are similar, right? But the
Hmm.
company that's building a strong culture, that's building systems and automation, they are subsidizing next month's output. But the company that didn't build all that and still met the same revenue goal, next month it's equally hard for them, right? And the month after, it's equally hard. Whereas the other company is rapidly subsidizing their future by building systems, right? So that is one playbook I try to institute is not just think about goals, but think about assets you're building along the way and how you're subsidizing your future.
It's kind of the sense I got after, our collaboration together as well, that you were I'm not going to say gambling, but you were betting a lot on the culture of
Mhm.
teams and potentially how units could be formed later on within the corporation. And to me, it seemed that you were betting more on that rather than immediate sales.
Right.
So it's very interesting you mentioned it. I was just curious. And what about aggressive short-term wins and long-term growth strategies? Are they closely related to the culture as well, or potentially your playbook? Or is it something else that differentiates them?
I almost always ignore the aggressive short-term wins uh, because they are very deceptive, right? And I almost always, like 99% of the time, I leave 1% for a chance. But most of the time, I go after long-term wins because
Mhm.
long-term is very deterministic. It's something I can control and it's repeatable, right? And it's very intentional. I like intentional wins where even if it takes now, it's easier said because companies are not always revenue wise or in that space to think long term because most companies are underwater and they're barely surviving, and in which case you need the short term win just to stay afloat, otherwise you go under, right? But those companies um, don't really dominate. So my when I get into a company, the first thing I look at, how do we survive? How do we earn the right to dominate in our space? And you cannot dominate if you cannot survive, right? So first you think about short-term wins, so you earn that, you go over that line of financial freedom, right? So
Mm.
your balance sheet is not in red anymore, right? So you start making a little bit money. Now you deploy that extra capital to think about long-term wins. This is where you cross that line of competitive freedom, where you're not worried about competition either, and definitely not worried about like going under, right?
Right,
And
because you've
those are the
stabilized a
companies.
piece of the pie, right? You've stabilized a piece of the pie and you're confident in what you're making each month.
Right, right. And then you start to emerge and start to think about completely dominating and
Mm.
completely crushing your competitors, right? Or in a small segment that you choose. But it's really important, especially now, there are so many competitors, so many companies. Every company has to think about how they're going to cut through the noise.
Is it the same thing when you're trying to scale, for example, a company upwards, and when you're trying to have an acquisition conversation, or in your experience, would that be something different? Are they related to each other, or not really that much?
Yes, they are, but the acquisition is growth via acquisition is much easier. in some ways than organic growth. I
Mhm.
find intellectually challenging and interesting to do the organic part. In fact, most of the growth I've done is very intentional and very organic. It takes
Mhm.
longer, but I feel like here's how I think about growth. I think every human wants to grow. Like each of us, whatever we are, we want to expand from here. Our consciousness wants to expand. Our intellectual keep. We want to do something bigger, right? That's just embedded in us. It's our DNA. It's like you look at a plant, you drop a seed in the ground, and it starts growing, and there's nothing you
Mhm.
can do to stop it, right? The only thing you do is just give it some sunlight and water. So we humans want to grow, plants want to grow, and companies are just a collection of us humans. Every company wants to grow, right? So what I think organically is uh, just like there's a lack of sunlight which could inhibit our growth. I think every company has some friction that they put in front of themselves without knowing. I just try to remove those frictions, right? And if you remove the friction, it grows on its own rather than focus on uh, growth strategies. I focus on what are the frictions that are inhibiting its natural growth.
Have you seen players persistent on maintaining the friction simply because they couldn't comprehend it in the way that you comprehend it, or not willing to accept it? Because I agree with you about human nature, but I also think that human nature by default is not that receptive to feedback. So have you
Right.
found yourself in situations where you kind of showed what the problem is, but the other party would not hear what the problem is?
Oh yeah, totally, all the time. In fact, more number of time people don't agree, and I totally understand, right? So you're talking about human nature. One of our uh, strong biases is cognitive bias, right? Or confirmation bias. So if you have seen success one way in the past, we want to keep repeating to see success, whereas every company is unique, right? They have their own DNA, but then every leader, every board member wants to repeat what they have seen in the past, right? And when I get into companies, especially when I start designing an organic success, I look at the organizational DNA and the founders and what are their strength and try to build something around their strength because you win your war by playing on your strength, not your opponent's weakness, right? So and by doing this, I run into all kinds of like pushbacks that look, this other company did it the opposite way and they still became successful, or why are you focusing on we haven't done things this way? And even the board members with a lot of experience, they're focused on a lot of the board members are just focused on short term, like next quarter results, right?
Mm.
Which kind of goes sometimes it's contrary to building long-term value. But yeah, I run into all kinds of pushbacks, and sometimes I just give up and move to the next one. And other times, if it's possible, I try to fight it back. But yeah, I've had all mix of experience.
Is there a boardroom moment that you can sort of mention here that you'll never forget, that was mind blowing to you, something that sort of, I don't know, either impacted you heavily or was mind blowing for you? Just a boardroom moment that was a wow moment for you.
Well, I mean, I've had a positive and a negative moment. Uh, let me let me see if I can share this without taking names. Um,
No names.
and I've been in like over 15 boards, so it's easy for me to obfuscate. um, there was a good one is there was a company that is like went public, and you can imagine actually ZoomInfo. Let's so they're massive now. They do. billion and a half in revenue. I
Mm-hmm.
remember early on, very early on in 2012, 2013, um, we tried to sell ZoomInfo. We got an offer, and thankfully, the board rejected that offer. Um, and the offer was for like less than 50 million.
Okay.
And it was really small, probably 25 million if I remember. At that time, it seemed like a good offer, and thanks to the wisdom of the board and the long-term thinking, everybody did well, and the company was clearly overvalued after like years and decades.
Not worth 25
So that
million,
was a
worth way more.
positive. And the negative one, let me not take the name, but I have seen multiple negative ones. I'll share the patterns. One of them
Mm-hmm.
was where a board approved a significant marketing expense. Well, I've seen that multiple times. They just got excited into making ridiculous investments, and of course, none of those panned out and like got the company into trouble. There have been situations where um, I think the board uh, has been hasty in making decisions against personals, individuals, or market selection or product. Um, oh, I feel like the right board should not get involved into operational. They should put the right people in place and let the company run. And but the reason they get involved is because a lot of the entrepreneurs are young or don't have experience and they feel like they're playing a role. But that's where they show up once a month or once a quarter. It's hard for them to like know all the details. But then, given their position, sometimes they feel like they have to give a response, a binary response, and that gets uh, uh, companies into trouble.
If you couple it with some cognitive bias there, then definitely,
Right.
definitely. Let me pull you out of that discussion as well, and let me put you into something else, back into B2B SaaS. So, uh, as I understand Zeer AI, you're trying to break through the market, right? So you're kind of trying to repair it is more of a correct word. But do you see a consolidation phase? Do you see another wave of potentially niche unicorns that will duplicate the model? What do you see happening in the space in the next 10, 15 years?
Yeah, yeah. So that's an interesting question, and this is irrespective of Zier AI. So let's keep Zier on the side. But here's what I see in the market. So if you look at last 20 years, the SaaS did really well. There were some premium SaaS vendors that even charged that did very well, and then there was like a big list, right? So I was looking at number of CRM vendors like a few weeks ago on
Mm-hmm.
G2. There are 800 of them. And then like 10, 15 years ago, there were only 30, right? So the pace at which these number of vendors have grown, not just CRM, but every industry vertical is
Mm-hmm.
crazy, right? So in the next few years, I won't be surprised if there are 3,000 CRM vendors, right? So what it does to say SaaS when number of options are increasing so dramatically. And the reason they are increasing is because of AI, because cost of building a tool is going down, right? And TAM is not necessarily increasing at the rate of new entrants. So then everybody has to share the same market with new entrants, right? A lot of the new entrants are going after niche or underserved market, right? So
Mm-hmm.
what that's doing is CAC is increasing. So some numbers that will make it interesting. In the last 3 years, CAC for premium vendors have gone up by 60%. And in the
Wow.
same time, their growth has dropped by 50%. Now, my prediction is next 5 years, this is going to get much, much worse, where there's going to be just like quantum increase in vendors and companies that are paying say $1 million subscription to Salesforce will say, you know what? I'm just going to make a copy of Salesforce and just host it internally and pay nothing and keep using the CRM. And they can make a with some AI tool, they'll just point it to Salesforce and some agency will run it for maybe $20,000 a year. And they'll have the same capabilities, right? And that's just going to destroy. So there's going to be downward pricing pressure on premium vendors, and there's just going to be more number of vendors in the lower end of the market.
Okay. Do you think that might also cause a quality issue? Not just a quantity issue. Do you think the quality is going to drop, or they'll try to sort of recover by offering a higher quality product? Where do you see it
So
going in
yeah, no,
trajectory?
that's a great point. So if you look at number of unicorns, let's say, right? So I feel like the world we are entering, there's going to be like now the question is, will there be less unicorn if there's pricing pressure from premium to lower end, right?
Hmm.
Um, I think there'll be less unicorn, but there'll be more decacorn or even bigger companies. Look at companies like Cursor or others, right? Within a year, they start doing hundreds of million in revenue, which wasn't possible before, right? So the good companies, the high quality companies, like you're saying, their valuations will rise even more. So there's going to be polarity, right? So they instead of 100 unicorns a year, there'll be 10 that'll have tens of billion in valuation, decacorns, right? But
Mm.
the other 90, they'll no longer be unicorn. They'll get like, so there'll be bigger polarity with a larger base of lower in the pyramid with a lot more vendors, a lot more SaaS companies that'll get funded, and a handful of them will do super good. So all VCs will chase those handful.
It sounds to me that at the ones at the bottom of that pyramid would have to consolidate with each other. So a lot of buyouts potentially, and mergers, M&As, for
Yes.
them to be able to survive as well. So
Yes,
it
there'll
does
be
sound
a
like
ton of M&As and buyouts and transactions and yeah, just different kinds than what we see today.
okay. What kinds do you think there will be?
So I feel like the venture investment itself, right now, if you think about the venture model, they go after winner take all model. They feel like the companies that have breakout companies can charge a premium, eventually own the market, right? So, and that's been true. Most of these SaaS verticals, there are two or three companies that have 80% of the market share, and then there are 50 companies fighting for the scraps, right? So I think that will change into there will be two or three companies doing very well, but they will focus on 20-30% of the market share with some really large enterprises, very high quality
Mm,
teams, right? And then the other 80% may be spread over smaller companies, but they'll be 10 times more smaller companies or five times more, right? So it is no longer winner take all,
mm,
right? Which means the venture investment model changes, right? You can't just invest and have a few companies pay for all the two successful company pay for eight unsuccessful companies, right? So VCs will have to work with a model where say they have five success or six success and two of them are out of the world, but then the other three or four are somewhat mediocre. So they'll have to think like PE firms, think about profitability, think about not have everybody like go to the moon or go bust, but few of them they'll want to just have 3x 5x return rather than 10x return, right? So that those kind of acquisitions where tens of millions of um, like valuations could still be a good outcome for some VCs rather than have $1 billion outcomes.
a very interesting take. Do you think this changes a little bit based on geography? Because, and I'm asking you this because I think I understand you have a global experience as well, so you have a good idea what's going on in the European market, APAC, US. And for example, the US one is way more aggressive. But do you think this differentiates based on the geography, or do
Yeah,
you see it across the market no matter which geo?
I think it changes due to geography. I feel like the European investors were already a little bit conservative to begin with, The US investors kind of lost the plot in a way where they started gambling or like looking for only like uh, the best investments to pay for. So they were taking bigger risks in some ways. Um, I do think the behavior will get tempered down in some
Mm.
way. They'll also look, I mean, it's already happening, right? All boards are asking for longer runways and more profitability and so on, which I feel like the Europeans were already asking to begin with. In fact, I tried to raise money in Europe, and it seemed like even in seed investment or Series A, this was like 15, 17 years ago when I lived in Europe. Um, it seemed like the seed investors were asking questions that a private equity investor should ask, right? They were uh,
What kind, if you don't mind me asking?
they wanted no risk. They wanted like product to be built, maybe even have some customers, and then they would invest even like a half a billion or like uh, yeah, that was a little bizarre. I had a small sample size, but that was one of the reasons why I moved to the US to start my company.
Do you think that's potentially the problem with Europe, that you guys have more innovation because you're in the US? I mean, because you're bigger risk takers in terms of investments, or is it something else? Is it pure capitalism that drives the US, for example?
I think in the end, capital drives the ability to take risk. The total capital available to European investors were low, so they wanted to deploy it in only very few selected uh, I guess investments. In the US, the capital available was much higher. Uh, we service candidates. Yes, you are right that the ability to take risk is much higher in the US than Europe, and that shows into the kind of investments or entrepreneurs or strategies taken. They're also, I think, it's just a bigger market. It attracts investments from global entrepreneurs as well. I have to say, my perspective of Europe is very dated. Uh, I lived in London like 2005 to 2007, 8 timeframe. So that's like 20 years, exactly 20 years ago. So I'm sure Europe is very different today. So yeah, take it with a pinch of
Well,
salt.
the reason why I'm asking is because I feel that Europe has hindered in innovation, and this is across all industries, right? So the expert network industry I was in started off in the US. Um, SaaS potentially, I'm not too sure, but probably started in the US. So most industries start in the US. And I feel there's a strong correlation between the amount of risk
Okay,
that someone would as an
so I'll
investor
I'll tell you,
and
I'll tell
innovation.
you, yeah, yeah, no. If you're going deeper into this topic, I think it starts with the regulation and the rules of
Okay.
engagement that the states put in place, right? So take an example since both of us are from data, right?
Mhm.
Um, the GDPR regulations. Somebody should look back and do a study on how much it benefited the UK economy versus US took a slightly more liberal path on GDPR, right? So they have their own versions, but it's not as onerous as GDPR was in Europe, right? Now, now if we do a post-mortem 20 years later, right? Some of the biggest data companies are in US, not Europe, right? So GDPR did not allow Europe to have larger data companies. In some ways, it inhibited. Now, on the other hand, did it protect Europeans' citizens' rights more than US citizens' right? Like, are
Questionable.
we worse off by not having some owners? Now, if you're a data privacy attorney, you'll say, yeah, the more, but let's look at it from an economic point of view when the trade-offs, right? I would
Hmm.
say it's not necessarily much worse off, right? All the hacks that happen in US also happen in Europe, and but we set we didn't set a level playing ground for, say, data companies to operate in Europe. We made it difficult, right? Once we make it difficult, now capital flows towards uh, geographies that have less friction to success, right? So just in data, US was a better geo to go after, right? So it's not a surprise that 20 years later, most of the billion-dollar companies in data are in the US, right? Now that's just one vertical, but I have a suspicion that in other verticals, some of this plays out as well, where regulations play a big role because capital is very fluid; it finds its way. If there were some, my worry is that Europe may be doing the same thing with AI and just like over regulating it.
Oof, that's interesting. That's interesting. So you that being a worry of yours, you think AI here is not going to be as effective or as strong as potentially it could be in the US?
I
That
think
sounds
so.
like a
I think so because and in some ways the state machinery in Europe is actually more sophisticated, more advanced in some
Mhm.
ways, right? And they're more thoughtful. But on the other hand, um, there's a trade-off, right? Over engineering regulation just inhibits entrepreneurial innovation, right? So with AI, if they put similar restrictions that they put with GDPR or data, which by the way, they are already actively working on. There are multiple groups in Europe that are, so then you'll find that, yes, AI is the new frontier, right? And if GDPR is any proof point and it's going to repeat itself in AI, then next 20 years we'll see the same thing in AI that we saw with data, where Europe will get left behind if they over-regulate themselves. In fact, more so in AI, right? AI is going to be it's going to unlock trillions of dollars of value, far more than what data
And
did. AI is like going to be bigger than the internet, right? And I mean, think about internet, right? We did put regulations in place, but over time, in the beginning, there were almost no regulation. The DMCA laws came in like 10 years after internet came
mhm.
about in the US, right? I do think, uh, US has a lot of flaws, but despite the flaws, the ability to take manageable risks um, and not over-regulate has been a strength rather than a weakness for US.
I tend to agree with you. I will agree with you, but my question to that is, do you think it's because a lot of policymakers in the US, and I know we're going a little bit off topic, and I promise this is the last question on that topic that I make. Is it because a lot of policymakers in the US come from business or real estate or construction or, well, the market itself, rather than being career policymakers and just being philosophers about a topic and then just implementing some regulation? Or do you think it's something else that
No,
drives it?
you hit it in the nail. I think that's it. And we just solved a very big problem. So a lot of the policymakers in the US, they have an open door where people from industry come in, work with government, and then they go out back into the industry, right? So uh, in Europe, if I understand, most of the policymakers are career bureaucrats, right? They don't go to the industry. In fact, they would look at it as a conflict of interest, right? So it's look at it this way. So I was just in an engineering meeting earlier today, right? And I was talking to these software engineers to change the way they build tool. In the past, we told them to build technology that won't break and that was perfect, right? And they had all these processes in place that took months to develop a software that now others with vibe coding and automated tool sets are building in like a day, right? So now engineering teams have to re-innovate themselves. Now, if you do build tools in a day with speed and agility, it'll also break sometimes, right? But then you just have to cope with that and recover, right? Now apply it to policy making. If you want to build a perfect policy that will never break, you are giving some trade-offs, right? And trade-offs are show up in terms of slower economic growth, right? Or movement of capital, uh, because you're inhibiting, creating business friction, right? Versus what US has done is still they have policies that still do think about data subjects, do think about monitoring, but slightly more business friendly manner. And then those days are gone when capital was rigid and stayed within your territories. Now capital moves quickly across the world, right? So it will move towards more liberal economies, more liberal policies, and that's where US ends up winning.
Winning. Sure, sure. Let me put a pause in that conversation as well because we're running a little bit on time.
Yeah.
I want to spend the next few minutes sort of about well around you and your experience altogether. So if I ask you, what is one thing you wish you knew when you started your career in data? What would that be?
So the one thing I did well um, is I wanted to master, almost have wisdom, like level, complete intuition about one single space. And
Hmm.
I switched companies every 2 years or so, very frequently, but I stayed in the same space for like 15 years straight, right? So um, I didn't realize how valuable that was, and I'm glad I did, almost accidentally, but I'm glad I did. In terms of uh, data or business, I think if I knew how much wisdom there is to compare like one company with their competitors and other competitors, um, and really use that intelligence into growth, there's a ton of value. I wish more people did this, where, if you're early in your career, I would suggest switch jobs very frequently. And I know it's highly counterintuitive and probably controversial, but I would say stay in the same space.
Well, let
And
me tell you my experience with that, right? So when I first did my first jump from one expert network to another, and basically it was a trade of idea of data as well. The one space was a dominant player where I based, and the other one was a dominant player in the global arena. So jumping from one to the other was originally, well, it was because of a plethora of reasons, right? Monetary, quality progression, communication, et cetera, et cetera, et cetera. So we did that. I did that jump, but it wasn't an easy jump because the prime company was very aggressive into how they wanted to sort of contain any potential leakage into either other companies or people establishing their own corporates, et cetera, et cetera. So I don't know what drove you. I don't know how you handled it, et cetera, et cetera. But what I'm saying is that in modernity, and especially in geos like the south of Europe, it's quite hard to do that jump because some people are scared, some others are motivated by money. It's a very hard jump to make.
right, right, right. No, I hear what you're saying. So it may not be obvious, but here's what I see, the process of learning at work. So whenever I go into a new company or a new country for that matter, right? In the beginning, you're learning a lot. You're curious. You're looking around and trying to up level, right? And then after a year or two, your muscle memory kicks in. You already know. Uh, and then you are cruising, right? So that's
Mm.
the time I feel like switching. Now I do realize that if you stayed in the company for 5 years, 10 years, then you get a new kind of mastery, a new kind of wisdom, right? But only in how that the company operates. As you get promoted and you begin to see, I wanted to get that level of mastery for the entire industry. So
Market. Yeah.
entire market. So I just ended up working with 15 companies, all competitors to each other. I kind of figured out, and now I know exactly how these companies are going to behave to a certain market change, right? And that gives me tremendous market power in terms of predicting the future.
Do you think a lot of founders of companies see that today? Uh,
So I could do what I did because I was not a founder. Because if I'm a founder, I have to stay in the company. I can't just switch in 2 years, right? Um, I honestly don't think people appreciate the fact that I have switched jobs. In fact, I wrote a post recently. There's an exec
so
recruiter that reached out to me and said, "Hey,
close
you
to
have
my
a
heart.
great," and said, "But your resume is messy. Like, why? I can't explain why you switched company so far. You are not very predictable." And um, I don't think people appreciate, but if I had to do this again, I would totally do it. In fact, I would do it more aggressively, and because I learned so much, I met new teams, new people. I know it's difficult for most people to do. I was fortunate um, that I ended up the way I did.
I'm sorry, this is a little bit of a personal question, but did you outreach these companies or were you outreached by them? Every time you
So
jump
what?
ship, then
Yeah, that's a great question. I've kind of built a system over time. So what I did is every time I'm in a job, I now I do much less, but I kind of build a bridge to my next job before, like 2 years before, right? So I started advising companies, and the reason I was advising is I just wanted to get a peek into what they did.
Mm.
And it wasn't so much for the monetary benefit, but if, and I just helped other teams. And in the process of helping, I got to know which one's doing better. So I selected the next ship to jump to in that period of time. As they start to, if you're working with two or three companies, you can compare against them, right, and see which one's doing better. And but I'll in the beginning, it was outreach, just meeting people in industry events and so on. Later, it started becoming inbound. Now it's all 100% inbound. In fact, last 5, 7 years, uh, maybe even 10 years, yeah, all of the companies I worked for were inbounds. But that's how it
Okay,
works in life, right? In the beginning, you just, once you start having some success, I guess people want to talk to you.
fair enough. Fair enough. Let me ask you two more questions, I promise. One of them is which KPI do you think is overrated and which one underrated and why?
Ah, interesting. I think the underrated more and more companies in future are going to measure themselves with revenue per employee. And
Hmm.
in the past, they didn't because revenue per employee was not important. Um, but that is a reflection of how efficient the company is, how profitable it is. I think that one metric covers everything that company and it's going to be really important in future. This is what makes the shift from winner take all model to like a profitable but still highly valuable company. Just one metric. The one that is kind of overrated and we kind of lost track on that, and it used to be very useful, is just activities per employee in sales, right? Because we
Hmm.
thought activities led to outcomes.
Hmm.
Uh, but now it's complete. The go-to market, like I said, is so broken. The sales math don't work anymore, right? So activities don't lead to outcomes because you have to give disproportionate number of activities to get the same outcome that you did earlier, right? So the math will increasingly become more and more broken in sales. Um, and well, that's why I'm doing Zeer.
Okay, fair enough. My last question to you is other than jumping ship, if you had to give one piece of advice to the next generations, to people interested in data space or people interested in entrepreneurship or, I don't know, building something, generally, if you had to give someone any advice, well, and I've heard you give many advice in the past, what would be that one piece of advice you would swear by?
I have so many. We should do another call to go over my advice. I have very strong opinions. But one advice for somebody early in the career is, well, let me see if I can add maybe a couple more. Um, is try be intellectually curious and
Mm.
communicate your ideas to others. So build a tribe around you. And in the beginning, it's tough, but then it gets easier along the way. Similar to what you're doing, like these conversations, right on social. So you're creating, I mean, that's what future is about. We are moving from an economy of where skills matter, where product mattered and substance, right, to an economy where distribution matters and CAC matters, right, as CAC is
Mhm.
getting expensive. And this transition involves, and we as humans would, we are going to be up leveling our expertise, right? We are going to let AI do a lot of the last mile work, right? So we will be taking over more creative, more strategic, and that's a shift that everybody, all of us in our own individual jobs, are going to do, right? And have pride in, and that's going to be very noticeable. In that process, I would say try to get a mastery in something, right? Like deeper mastery. And like my way of mastery was stay in one industry. uh, you don't have to jump ships. Maybe you stay in the same company or just read up or find a way to get accelerated mastery in whatever thin slice you can.
What if you don't know where you want to get mastery? So, for example, myself, I don't know where I want to get my mastery in, and I do have a good sense of, for example, the expert network market or and the data market, but well, I have a mastery of the expert network market, but I wouldn't sort of want to focus on it. I would rather get a mastery in something else. It was a circumstantial
So,
mastery of some
right,
sort.
right. So if you enjoy space,
Hmm.
or if you think there's that space you're good at, what I did was I just offered. I believe that the best way to build relationship is always offer value and then ask, right? So I just went around offering everybody free value, right? So, and people, some took it and then they were indebted, and that's how you build long lasting relationships. So if you already have mastery, then find new vendors in expert network, let's say, that are popping up, right? Talk to them and help them out, and worry about what you get later, and you will get. It's easy to, you know, get rewards for your success.
Yeah, but I've seen your patience, and I don't think I am the kind of person that would have that.
uh, well, in that case, AI is unlocking so much new value. There's going to be We'll be inundated with options. uh, with it. So think about AI as what happened with internet. Everything was up
Mm.
for grab. No matter what you did, you could do it digitally online, right? And some jumped. That's what's happening with AI. No matter what you do, AI is going to disrupt it. So, find a slice, like including expert network and others, and see how with AI align yourself with a team, um,
Sure.
or data for that matter, right? So just I think like Shakespeare said this, right? So there are always tides in the lives of men. So once you ride one of those tides, you go over, otherwise you go under, right? So fine, this is the big tide that's coming for all of us.
Hmm.
So let's find a way to ride one of these, right? And that what will take us help us rise above others.
That's fantastic. I don't think there's a more poetic way to finish this, Santosh. So I have nothing else to add. I'll leave it at that. Great statement by Shakespeare and the data king himself.
Thank you. Love this
Th-
conversation.
Thank you for taking the time to speak to me. I appreciate it.
All right. Cheers. We'll talk again.
All the best, Santosh. Have a good day.